I am so excited to welcome my first guest to the show. Her name is Lynette Khalfani Cox. You guys might know her better as the Money Coach, and she is a personal finance expert, speaker, and author of 15 money management books, including her New York Times bestseller, Zero Debt, The Ultimate Guide to Financial Freedom. Lynette has been seen on more than 1,000 TV segments nationwide, including appearances on Oprah, Dr. Phil, Dr. Oz, and the Good Morning America, the Today Show, and many more. She's a former financial news journalist with CNBC and the Wall Street Journal. She's also the CEO of the Money Coach .net LLC, which is a financial education company that she runs with her husband Earl. And if you guys want any more information from her after tonight, all you have to do is go to askthemoneycoach.com. Lynette, welcome so much to Small Biz Chat Live. I'm so excited to finally get you on here.
It's been way too long, and I'm excited to be here. And frankly, is there a better time for us to be talking about financial issues that hit small business owners? I really don't think so. So it's a great opportunity, and I'm so happy to be with you.
All right, well, we got to dive in. You know, my original call, when I called and asked you to come on Small Biz Chat Live, it was really talking about, you know, the Corona cash, the small business loans, and all this stuff had just been announced. Now we're like 2 weeks in since all that stuff was announced. So it's actually a really appropriate time for us to stand back and find out what the deal really is. Like, is the government for real? It just seems like they've kind of bungled everything that's going on. And so can you tell us, you know, where are we now that, you know, today actually people got stimulus checks. Some people did. I saw a whole bunch of people who didn't, but the government claims 80 million people got stimulus checks today. I ain't get one, but Lynette, tell me about the people that, you know, were looking for this bailout, you know, on the personal side of their life. And then let's talk about what's going on with the business loans and grants and things that the government's supposed to be doing for us.
Sure. So some folks really were happy today, right? Because they started seeing these so-called stimulus checks. The IRS calls them economic impact checks, economic impact payments of $1,200 per adult for folks who are making $75,000 or less. That's according to your 2019 taxes. If you didn't file your 2019 taxes, they do look at your 2018 income. So that's for individuals. For couples who make up to $150,000, they get so-called stimulus checks in the amount of $2,400. And then for individuals or couples, if they have a child who's age 16 or under, they get an extra $500 per child. So that's what all the kind of, you know, hoopla was about for people who were getting the stimulus checks, the economic impact checks, call them what you want. They're really economic relief payments. And they prorated them as well. So if you made as an individual above 75,000, but less than 99,000, then you still got something. It wasn't the full $1,200. And again, for couples, even if they made over 150,000 to as much as 198,000, they still got something. It wasn't the full 2,400, but it was just doled out on a prorated basis and reduced accordingly. So that's one side. And I think, you know, again, some people were happy. I didn't get that one, and, you know, that's fine. I'm not expecting it.
Yeah, I feel like Christmas missed us, right? But that's okay.
So it's fine, yeah. So then, and just to, you know, before we kind of put a bow around that, because I do think a lot of small business owners, entrepreneurs, and even would-be business owners were, you know, looking forward to getting those payments. Those are going to be doled out on a rolling basis, right? So this week was the first week that we saw that happening. But frankly, we know that the government only has about 60% of all taxpayers banking and data in terms of their financial institutions. So they're able to most quickly send those payments to people who they already have your information on file, because most people do typically get a tax refund check. About 75% of taxpayers, of tax filers, do get a tax refund on an annual basis. So if you already got one in the past, they have your banking data, and that's fine. But through the IRS's website, I should share with your audience as well, if you're among the 40% of people that hadn't filed, they didn't have your information, maybe you pay taxes and they only had your information through the mail, etc., Anything going out through the mail is going to start in May, and then on a rolling basis, continue over a several month period. I'm suggesting to people that if you want to get your stimulus payment more quickly, you should definitely go check out that site that the IRS and Treasury put up. You can link through it. You can go to irs.gov and get more information. But essentially, you can kind of go say, where's my stimulus check? You know, and you go log on and you give them your banking and financial data. Some people may have to fill out a quick form, etc. You're going to identify yourself, tell me your social security number, etc. It's perfectly safe if you go through the irs.gov website. That's a federal, site. But you have to let them know how to reach you, and the direct deposit via your bank account, the checking, the savings account, etc., is going to be the fastest way to do that if you do want the stimulus check. So the other side of it, of course, is directly for folks like yourself and me and Chelsea and others who are small business owners.
What is the government saying they're doing for us? Because it seems like it's changing every single day. So people are emailing me, asking me questions, and I'm scared to answer the last thing I learned, because it seems like it's almost become this shell game of like, they give you information and then it changes and your bank tells you to apply. And there are people that I know that were approved for $300,000 loans, $500,000 loans, only to be then sent an email saying that they're going to get a third of what they were already approved for. So what is going on with that?
So in my opinion, if I'm honest, it really has been kind of a hot mess. Okay, I'm not going to lie, because the rollout of both of these programs has been marred on many fronts by delays, by sometimes inaccurate, or I think certainly misleading information, by ever-changing guidelines and rules, by clarifications, by a lack of clarity to the banks, who at first didn't want to, kind of roll out these programs or facilitate the loans, at least, because they never felt like they had clear guidance from the Small Business Administration and from Treasury. So the two programs, though, have launched, and in a nutshell, the two primary programs through which the $2.2 trillion CARES Act is trying to funnel money to the small business community relates to the so-called PPP loan program. That's the Paycheck Protection Program. That's the one where you go through banks, credit unions, or FinTech companies in order to apply for a loan, a forgivable loan, along with another SBA program called EIDL, or the Economic Injury Disaster Loan Program. Totally separate program, and you go right through the SBA to apply for those funds. So just so that your audience has a really clear understanding of both, and then more fully understands why it's been, as I said, kind of a hot mess, they really do need to understand not only the two channels that people were going through, but also how these two differed. So the PPP loan program had out of this world demand. I mean, I think probably, of course, going to be the single most popular SBA loan program in history, given the scale of the downturn and the coronavirus that has, shuttered so many doors and hampered so many small business owners from, doing what they do and offering their products and services. So small business being defined as 500 or more employees, but they also widened the definition of who qualifies for that PPP loan or for the EIDL loan. So in addition to what we think about as traditional small business owners, they made 1099 contractors, self-employed people who are part-timers, gig economy workers, pretty much anybody who gets a 1099 could apply for one of these loan programs. And so the PPP loan program was of such tremendous interest because it offered forgivable loans of up to $10 million. And even though, frankly, most folks are not going to get anywhere near that amount, they're not going to apply for that amount. Most people aren't going to even apply for $1 million, or even in some cases, not even perhaps 100,000. You'll certainly see many who will be applying in the, hundreds of thousands range, etc. But the cap is determined by your average monthly payroll. So they took a look, they said, what is your monthly payroll? And if it was, say, $10,000 a month in payroll, and I'm just totally making up a number, they said your maximum loan amount is 2.5 times that. So if your payroll was $10,000 a month, then your maximum loan amount would be $25,000. And then how do you make it forgivable? You make it forgivable by sustaining payroll levels, by agreeing to keep people on the books, even if it's yourself, that you're just paying your own salary for a sole proprietor, for example, or mom and pop business, by maintaining payroll levels and also not just slashing pay or reducing headcount. So they don't want you to fire anybody. In essence, the government was trying to float small business owners on the payroll side. They're saying, if you keep the workforce employed, that's a benefit to us because that'll be fewer people hitting the unemployment lines and driving up unemployment rates and having more unemployment insurance to be paid out. So the PPP loan program, super popular. They budgeted about $350 billion for it. And literally within week one, about $250 billion was already processed and claimed and accounted for. They're asking Congress for yet another tranche of money for $250 billion more just for the PPP loan program. But like I said, the rollout and the execution, it was pretty messy there, and I think a lot of people said, how come nobody told us that, for example, I couldn't just not walk figuratively, I'm saying figuratively, not literally, since nobody's walking into a bank these days. How come I couldn't
Not without an appointment, you're not. You are not going to the bank without an appointment, and they better know you at that bank too to even get
That's for sure. So, drive-through, getting online, etc. You're able to still access loan options, whether it's a bank, a credit union, again, a FinTech company. But many of the top banks really said, we're going to stand up and help facilitate this program, but we're starting with our customers first. And so even that, I think, threw a lot of small business owners who were like, what? How come I can't just come and apply anywhere? Or some people said, listen, I do have a banking relationship with you. I have a checking account, I have a savings account. I've been a client here for 10, 15, 20 years, whatever. It's been 2 years, whatever. But if you didn't have a
business, right? The issue was if you didn't have a business account, right? If you didn't have a business account that they could validate, because I even know from the application, you had to write down an account number to where your stimulus loan was going to get deposited in the application. So they were very serious about, you better have a business bank account, right? And that's what's messing up all these, Uber driver and, self-employed people that were operating as a sole proprietor through their personal checking account. That's why you can't access the loan, right?
That's a good chunk of it. That's part of it. But frankly, across institutions, they all had their own specific guidelines and rules. So some of them were saying, yes, you absolutely must have a business checking account. And frankly, as I shared with my audience on Facebook, I said, I actually understand why they did that. Banks have to follow something called the Know Your Customer rule, et cetera. They have to help prevent fraud. Not to say that anybody would be applying for this PPP loan program would try to pull a fast one on the government, but they have to do some verification in terms of identity, et cetera. So they've already established that. You've already given them your driver's license. If you already have a business account, they've seen your deposits and the flow of money, going in and out of that account. So it's much easier, frankly, and quicker for them to facilitate those loans because they've already done business with you and they have a robust history of doing transactions with you. Well, separately though, the point I want to make is besides just having a business checking account, let's say, some lenders actually did say they wanted you to have a more broad or more deep or more robust business banking relationship. So some wanted you to have a business line of credit with them or a business credit card, et cetera. So it's, for some institutions, it went beyond just, have a business banking relationship. And again, you had a lot of folks who were salty about that. So the PPP loan program in and of itself, again, had its own challenges, even though I kind of was like, did you guys not anticipate demand? What were you thinking? Like, hello, didn't you know there would be a rush of people, on these loans?
Well, I think when it comes to small business though, Lynette, I think people don't realize that there are 28 million small businesses in the U.S. I don't think they realize how many people own businesses. People also don't realize that 70 to 80% of the net jobs in the country are people working for small businesses. So they needed to do the PPP loan program because a vast majority of people that were about to be put out of work were going to be put out of work from small businesses if they didn't help small businesses. And what we learned from the last recession of 2008, 2009, they didn't help Main Street. They let small businesses die. They gave everybody a bailout but Main Street. And so finally somebody learned from that and said, well, wait a minute, let's not destroy the small businesses this time. Let's help them. But then they didn't realize when they opened the gates up to anyone with any kind of side hustle business, whatever, now you got all kind of people applying for loans that don't even have proper paperwork. They don't have a 941. They're not using a payroll company. They don't necessarily have their business taxes done. So you now have, what's happening is you're going to make a whole bunch of people become big boy and big girl businesses now, because you got to have a couple of things to go into a bank and establish a business bank account. You can't just walk in there with your driver's license and establish a business bank account. You have to have an EIN number from the IRS and the articles of incorporation of your business or LLC, depending on how you did it. So that is what's kind of separating the wheat from the chaff with a lot of this, I think.
And you raise a very good point there, and you're right. It's the scope of how many people they've opened it up to, which again, from the standpoint of somebody who has a side hustle, who started a part-time gig, et cetera, it's good for them if that's now became either their main or a good chunk of their income. But I should point out too, this was incredible to me. Not only did they open it up to more people who were, traditionally wouldn't have been able to get an SBA loan, they also waived a lot of the former rules to make even more people eligible. So before, whereas you might have had to been in business for at least 1 year, no, for the PPP loans, as long as you were in operation from February 15th, 2020, you were good, you could apply. For the EIDL loan, as long as you were in business from January 31st, 2020, you could also apply. So even that barrier, again, and I'm not trying to take money out of anybody's pocket, everybody has to eat, but I'm just saying that the government by far and away underestimated the scope of the problem and the extent to which people would need help. So
I agree. The other thing I want to point out too is that what the government didn't recognize, and I don't know why they didn't recognize this because these statistics have been out here, but 43% of the U.S. workforce are gig workers. So you mix 28 million small businesses with 43% of your workforce in the U.S. being gig workers, because a lot of gig workers don't necessarily think they are small businesses. They are, hustlers. Whatever they're doing it in addition to a job, right? So I don't know why they didn't do the calculus, like to kind of figure out there was a whole lot of people that they were making eligible for these loan products.
And if you're telling, a small business owner, a part-time or a contractor, 1099, what have you, that this is basically going to be a free grant, ultimately, if you follow the rules. If you use 75% of your loan proceeds for the PPP loan on payroll, again, even paying yourself, and rather, if you also use the other 25% towards mortgage interest, any rent or lease payments that your business has, or for utilities, use the 25% on that, and then your loan amount will be forgiven. Who's not gonna, I've applied, I haven't heard anything yet, but who's not gonna wanna take that deal? And you spend the money in the 8 weeks right after you receive the funding. You have to maintain payroll and use it for those other costs that I just mentioned for 8 weeks. So let me tell you guys though quick about the EIDL loan, because this was another area of, problems and drama, shall we say. So I told you how the PPP loan was up to 10 million. If any amount that's not forgivable is paid off over a 2-year term at a 1% interest rate. So super low interest. And again, that's why it had such high demand. Separately, if you went right through the SBA, you could apply for this disaster loan, this economic injury disaster loan, up to $2 million, 3.75% interest rate, 30-year term. Again, huge demand, big run on that right to the SBA for folks who are trying to get disaster loans, and especially because they included a grant component, a $10,000 grant component. Now, what ultimately ended up happening and why so many people were frustrated as all get out this week is a lot of people started getting notices back saying, oh, you know what? $15,000 is the cap. People were like, wait, what? You mean to tell me first you said 2 million would be the cap, and I applied for 150,000 and I got approved for 150,000 or whatever. And now you're saying 15,000 is the cap. So they've significantly dropped. Now it's my understanding, it's my interpretation. And again, I kind of ranted about this yesterday on Facebook myself. It's my understanding that the language wasn't as precise perhaps as it could have been in terms of all those emails and what they put out to people. I think what the government really means is that this is the first tranche, or the first disbursement to small business owners is capped at $15,000. Now, that's not to say that after they go through this round, they might not, execute on more if you have been approved for, say, 100,000 or 30,000 or 50,000. But that first disbursement, if you get it, it definitely is going to be capped at $15,000. So, but even that is just, it's frustrating for people who have, put a lot of hopes into this, trying to maintain payroll, trying to pay their bills, et cetera. And then the $10,000 grant turned out to be, a real switcheroo on that, because people thought, okay, I can get a $10,000 grant. Not so fast. They had a lot of fine print. In essence, they later said, they didn't put this in the rules or the guidance up front. It was only after the fact, after people applied, that they spelled out this part of the fine print. They said, nope, we're capping that too. And it's $1,000 grant per employee. So you have to have at least 10 employees in order to get $10,000. So again, another letdown for, I think, a lot of small business owners who are really struggling during this time in the COVID-19 emergency.
Wow. And this is just interesting. Now, one of the things that I wanted to ask you about too was, now the FinTech folks are now allowed to process these loans too. So I saw that PayPal and QuickBooks are processing loans. And I also saw that I think it's Cabbage and Fundera are like on tap. I don't think they've started it yet, but they're like collecting people's data because they're trying to get approved behind the scenes to be processing these loans too. I mean, do you think that it makes any difference where who you get your loan from? I mean, or are these rules going to be the same no matter who or what you're dealing with?
So I actually do think it makes a difference, because one thing is about access, right? So if you can't go through a traditional, say, a large bank, then you have other alternatives. Certainly there are some credit unions, some local and community banks that are accepting all customers that you could go and apply for a PPP loan through them. So that's an option. With the EIDL, remember that one, you must go through the SBA. It's not, you don't go through institutions for that one. But for the PPP loan program, yes, now that the FinTech companies have been brought on board, I do think a lot of them, because of their efficiencies and technology and sort of their expertise is really around speed of execution. I do think it's going to help the money that's in the pipeline kind of more quickly get out to entrepreneurs and small business owners. We've seen already, initially the SBA had their list of preferred lenders, and so everybody who was on that list, I forget the number, I think it was 700 or 800 or so lenders, the preferred lenders, sort of automatically approved to disburse these loans. And they don't have to do much underwriting. That's part of the rules. They're 100% insured loans. So the government, the banks are not going to take any loss on these loans. In fact, they get payments. They get 5% fees for loans $350,000 or less. They're not, I don't think these are risky loans really by any standards for them. If somebody doesn't pay, the feds are going to step in and make the banks whole, in other words. So those others that were added now total 4,600 lenders that are approved by the SBA, again, because they're trying to pump the money out and get the money into the hands of small business owners as quickly as possible. And so, yeah, all of those that you mentioned, PayPal and whatnot, NAV is on that list as well. Fundera, you mentioned, a lot of the online FinTech and other companies we know of that's really kind of service the small business community. They might be the only source or one of the premier sources through which small business owners who don't have a traditional banking relationship with another financial institution, that they might tap and go through it that way.
Yeah, so I want to switch gears with you just a little bit for the remaining time that we have. And let's just talk about, if you're a small business owner right now trying to keep your doors open, right? How should they prioritize cash right now? I mean, certainly I know that a lot of the credit card companies and the banks, the loans and stuff, they're giving people a break right now. They're doing, 2 to 3 months of forbearance, if you will. But, how should they prioritize cash? Like cash is king, and especially king right now. Do you hold on to your money? Do you pay your vendors? Do you still try to, like, how should they be using their money?
So it's a great question. And I think you have to consider the context and think about folks who have some cash cushion and the ability to ride out another month, 2, 3 months or so. Most don't, frankly. We know that most don't. But some people do have lines of credit that they can fall back on, either business or personal lines. So I think in general, the strategy first is that if you can afford to pay your bills, I think that you should. For a whole host of reasons: preservation of your credit rating, which is going to be important on the other side of this, maintenance of your relationships with vendors, creditors, et cetera. And also the ability to do things later, whether that's I need to get a loan later and so forth and so on. So if you actually can afford to, I think that you should. If you can't, by all means, I would be on the phone or online talking to every creditor. And you're right, Melinda, that the banks, in terms of whoever owns the mortgage, for example, or has the mortgage on your house, if you have a government insured loan, like an FHA loan, or if your loan was via Fannie or kind of through, and they don't supply loans, but they issue or they guarantee loans through Fannie or Freddie, Fannie Mae or Freddie Mac. Any government insured loan on the mortgage side, you can get a forbearance. You can, talk to your lender, loan servicer that is, and make sure that you don't have to pay right now if you can't afford to pay. So, and that's, up to 6 months. So that can give some breathing room for folks. Ditto for federal student loans. So if you're a small business owner, you went to college, you have student loan debt. Right now, we know there's 44 million Americans who have student loan debt, and most of it is federal student loans. Well, right now, you can get a hiatus on your student loans. In fact, everybody just automatically, they're not charging people for federal student loans. And the average student loan payment is $383 a month. So that's some breathing room. So you don't pay for April, May, June, July, or August. Ditto on the tax front. If just as a small business owner or as on the personal side, if you owed taxes and you were in delinquent or default status or, collections or repayment and that kind of thing, they're putting a hiatus on all of that too. They're halting all collections. They're not seizing anything. They're not coming after you. They're not putting stuff on your credit report. So yes, if you are in need, I definitely would say reach out to your lenders, auto, credit card, student loan, mortgage lenders. They'll either have something on their website, and online is usually the fastest way to do it. Either they're giving sort of blanket relief and saying, okay, you can skip making a payment. You can make a partial or, payment, or you can put this on the back end. Either they're telling you what they're offering, or they're saying, here, call our toll-free number. And then they'll talk to you about your individual situation and then work out a plan for you. So I do think you need to be cognizant of your options. And one way to tide yourself over and to get through this is to ask for help when you need it, and also to tap into all of the financial benefits via these 3 stimulus packages, because it wasn't just the CARES Act, it was 2 before it, to tap into all those benefits. And the benefits are the stimulus program, unemployment compensation, again, for which self-employed people now qualify because they changed the rules for that. Medical leave pay, if you've been quarantined or sick with coronavirus, anything like that. Family leave benefits. All this is available to self-employed persons as well, and to small business owners. So family leave. There's, for low-income people, there's food and nutrition support. I mentioned the student loan and the federal tax relief, and then of course the SBA grants and all those things as well. So tap into every resource that is in fact federally available to you to try to get you through this crisis.
All right, so that is how you can get your Corona cash. Well, listen, I have one last question for you, and then we're going to move on. But Should a small business owner consider liquidating their retirement assets right now to keep their business going, or even their household at this point?
So I'm actually glad that you asked me about that because I don't feel like this issue has gotten enough attention. So part of the CARES Act was actually to change the rules around accessing your retirement funds. So if you have an IRA, if you have a 401k, 403b, 457, those kind of plans, qualified retirement plans, they changed the rules so that you can access $100,000. You can get a loan up to 100,000. That's up from 50,000. That was the previous limit. Or you can take a distribution up to $100,000, again, up from 50,000, and not have that little nasty 10% penalty if you're under the age of 59 and a half. So they've suspended that 10% penalty. If you do take money out of your 401k or your IRA, you can repay it over 3 years, and it's a non-taxable event for you. So I like the idea. If somebody has retirement monies, I would definitely say I would do, if I really had to, as a last ditch effort, I would do the loan first. And then I would do, if I wanted to take a distribution, I would take a distribution from a 401k first or second, I guess. And then an IRA would be the last thing that I would tap. And the reason is that just kind of a little bit of psychology and human nature. The loan, you repay yourself back. So you're going to put your money right back in there. And I don't want to see people deplete their retirement savings because you're going to need that later on in life during your golden years. And again, the loan, not going to be any taxable consequences to you on that. On the distribution side, if you take a distribution, you don't have that 10% penalty, but you do have to pay ordinary income taxes on that. And so they stretch it out and they give you some breaks and whatnot, but it is considered, you got to pay taxes on that. So to not have to deal with that issue, I think the loan is the better option. Plus, I like the idea if somebody has, say, a side hustle, but then they have their main gig, a W-2, and they have a 401k through their job, it's going to be replaced via automatic payroll deductions. So we're making sure the money it's forced savings to put the money back in there. And I think that's a way to guarantee that it'll get put back in there. That IRA, people have the best of intentions. They think, I'm going to put it back, but then there's nothing to stop them. Nobody making them put that money back. So that's why I would put that last on the kind of totem pole there.
Oh my gosh, you have been such an incredible wealth of information tonight. That is why you are my money coach, but you're also the money coach. So thank you, Lynette Khalfani Cox. If you guys want more information from her, she is askthemoneycoach.com.